Hey guys, how's it going? Hope everyone's doing fine. Now, if I look at my life over the past 1 month, these are the products and services which I've been using on an average on a daily basis. So first we have WhatsApp, then we have Facebook, then we have Instagram, then Netflix, my iPhone, YouTube, Windows 11, Android, Amazon, and Zoom. And this is most probably true in your case as well. These products and services have become an inherent part of our lives, and these belong to companies which are based out of US. And in this video, I'll be discussing as to why you shouldn't just consume these products and services, but also go ahead and invest in the companies these products belong to, that is, buy their stock. So the first reason why you should consider investing in these companies is reliability. So if I take the example of Alphabet or Google, they have developed products or services which have become part and parcel of our lives. For example, Google Search, Google Maps, YouTube, Android, Google Chrome, etc. I'm sure if you're watching this, not a day has gone by when you have not used one of these services. Hence, it is quite safe to say that this is a reliable company and it will continue to remain so for the upcoming future. Now obviously, you should be slightly alert and aware about market developments because after all, you're investing in the stock of a company. But for now, Alphabet seems to be a safe bet. Now obviously, this is not a stock recommendation for you to go ahead and invest in Alphabet, but you do get the general idea, right? Now the second reason is something that is quite interesting and which gives an edge when it comes to investing in the US stock market. That is benefiting from rupee depreciation. So rupee depreciation refers to the fall in the value of Indian rupees against any external currency, which in this case is the US dollars, due to market demand and supply of those currencies. So you must be knowing that the US dollar and Indian rupees have an exchange rate. Currently $1 equals 75.34 rupees. So if you have $1 with you, you can go ahead and exchange that, and in return you will get 75.34 rupees. Now interestingly, 5 years back, the same exchange rate for $1 was 65 rupees. Which means 5 years back, if you had 65 rupees, you would be able to get $1. But today, you need more rupees, that is 75 to get $1. Hence, the value of rupee against dollar has depreciated. This is what is called as rupee depreciation. So let's say you go back 5 years and you accumulate 6,500 rupees, and using that, you buy dollars. So since the exchange rate at that point was 65 rupees for $1 against 6,500 rupees, you would get $100. Now let's say you just kept those $100 with you and 5 years has passed by and now you're in 2022, and now you go ahead and you exchange those $100. What will you get? 7,500 rupees, because currently the exchange rate is 75.34. So over a 5-year period, you have increased your money on absolute terms by around 15% just because of rupee depreciation. So this is quite interesting, and let's see how this complements when it comes to investing in US stocks. So like I said earlier, if you go back 5 years, that is you go back to 2017 and you accumulate 6,500 rupees, what would be the equivalent dollar amount? So first of all, let's check the exchange rate back in 2017. So currently you can see the rate is 75.96. So this is the 5-year chart. So if I go back 5 years, you can see in April 2017, it was 64.45. So let's write that down here, 64.45. So the equivalent dollar that you would have 5 years back would be approximately $100. So this is what you would have 5 years back. Now with this, you go ahead and say you want to decide that you want to buy Apple shares. So let's check the share price of Apple's 5 years back. So the current share price is $170.44 of Apple. So this is the 5-year chart. 5 years back, it was $35.84. So let's write that down here, $35.84. So you have $100 with you, and one share of Apple costs $35. So the number of shares that you can buy is 2.81 shares, which is pretty good. Now let's come to 2022. What's the share price of Apple now? As we just saw, it's 170.44. That is quite a lot of growth. So 170.44 is the current Apple share price. So what would be the value of my current investment in Apple? That would be, I have 2.81 shares of Apple, and one share price of Apple costs 170. So that's 170 into 2.81. So my current investment in Apple is approximately $480. So first of all, let's calculate the absolute returns in USD terms that I have against my investment in Apple. So that would be this minus this divided by this. So this is my absolute return that I've made from my investment in Apple, 376%. So let's convert this to the annual average returns. So the formula that I would apply is this divided by my initial investment to the power 1 divided by 5 minus 1, 37%. So on an average, I've made 37% returns per year from my investment in Apple in 5-year period. So this is before rupee depreciation that you have. So let's see what happens after I factor in rupee depreciation. Now, what's the current USD INR exchange rate that we just checked? That is 75.96. So let's factor that in here. You have 75.96, because of which your current investment in Apple is 36,400 and you had invested 6,500 rupees. So you had invested 6,500 rupees 5 years back and now you have 36,400. So if I calculate the absolute returns for this, I would get this minus this divided by this. So you can already see an increase of around 100% in absolute returns. And now if I come to the average annual return, so let's see what that comes out to. 1 by 5 minus 1, which is 41%. So as you can see, due to rupee depreciation, there is an increase in your average annual returns by around 4%. So which is 41 minus 37. Yeah, this is coming to 5% because of rounding. So that's what rupee depreciation can do for you, and this can only happen if you invest in the markets outside India. And the third and the last reason for you to invest is it's really easy to do it now. So if I consider the scenario a few years back, it was not that easy and there were a lot of fees involved as well, but now the charges required for you to invest outside, that's in US, is really minimal and can be done by anybody. So you literally do not have any excuse now for you to not invest in US. And one more point which I would like to highlight in case of investing in US is you can buy fractional shares. So one share of Alphabet costs around $2,800, which is equivalent to around 210,000 rupees. But you do not have to buy one whole share of Alphabet. You can buy a fraction of that share, which means you can invest for as low as rupees 100 from India. So what more do you want? So those were the 3 reasons for you to go ahead and invest in the US stock market in addition to whatever you're doing here in India. If you want to check out what's the difference in being rich and wealthy, you can go ahead and click here. And if you want to know how you can avoid the trap of hedonic adaptation, you can go ahead and click here. That was it for this video, and until the next one, take care, see you, and bye-bye.